You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. Time to rock out on another episode of everyone's favorite vol program. Yes, it is time once again for a little bit of Volatility Views, the premier program for vol traders. I hope everyone out there is having a good, a fun, and exciting trading week. It's another wild one. If I sound a little bit different, of course, coming to you from the Southern studio here this week. So yeah, not the Southern studio that we had down in in Palm Beach just a week and change ago, which many of you are enjoying right now as our content from OIC is hitting the network. Of course, a lot of it already hit the pro. If you want to get access to early fun like that, all kinds of good stuff, theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old program today, I'm pleased to welcome back on the man who is the Joan Rivers to my Johnny Carson of vol. Yes, he is none other than the once and future Dr. VIX himself, Mr. Russell Rhoads, now holding court at the Kelley School of Business. Mr. Rhoads, welcome back to Vol Views this week, sir. How are things in the vol world and just in general in the Mr. Rhoads world?
In the Rhoads world?
Yes.
It's fine. Just got a semester behind us and got a lighter schedule this summer, so I get to work on some fun stuff. Hey, if I go start my own podcast, are you going to do like Johnny Carson and never speak to me again? Because that's what happened with Joan Rivers. She started her own.
Probably, yes.
Yeah, okay. That's what I always kind of figured, that I'm on thin ice all the time with you.
I will kick you to the curb. I'm just trying to see. I don't think, make sure the live is hearing your pearls of wisdom as we keep on rolling, listeners, right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was and still is from a vol trading and trending analysis and all sorts of fun perspectives out there, listeners. And it's another fun week, another interesting week. We're kind of back to the, if you don't like where the market is right now, just wait 5 minutes. Not quite as aggressive as we were, let's say, a few weeks ago when we were whipping and sawing for the ages. 100, 150 handles in the S&P at a clip. Not quite there, listeners, but still a good little bit of intraday vol, a little bit little bit of intraday juice to keep the old heart pumping out there, listeners. As we're kicking off the show, if you were looking for a little bit of downside back on the screen in the S&P, you're getting it today. S&P off about 0.2%, even though it's like we have bounced off the lows. We did break through 5,800. Looks like we got down to about 57 and 3/4, somewhere in that range, a little bit north of 5,800 and now 5,806 to be precise as we're kicking off the show. Still off about 36 handles in the S&P. Dow off a little over 0.5%. NASDAQ off about 0.85%. So NASDAQ leading the charge to the downside out there these days, which it is wont to do. It does like to lead the charge in whatever direction we're moving in out there, listeners. And our old pal VIX Cash got a nice little lift this morning. We were seeing a few of those trade war rumblings. Remember, we were saying on some of our recent shows that maybe this whole trade war thing not quite in the rearview mirror completely, the way the market was just pricing everything was behind us. Well, we saw a little bit of that getting mixed into the system again, hence that sell-off south of 5,800, and VIX Cash popping hard. Let's see, we got as high as, get this, listeners, 25.5 out there in VIX Cash this morning before settling back down. We were still north of 22 right before showtime, about 22.25, which puts us up about 4.5 points. As the show has kicked off, we have ticked back a little bit down to 21.75. Still up a little over 4 handles, about 4.1 handles from where we were this time last week. Our old pal Volley, Mr. Scott Nation's Just the Facts Man, at the money vol measure, 1840, up 3.6 handles from where it was this time last week. And good old VVIX itself, the vol of vol, at a 108, listeners, up a whopping 14 points. Remember, we've been saying for a while, even though the market was rallying, people were pricing things like we were just whistling past the graveyard. VVIX never really fully retreated. It dipped back into the mid 90s, and that was kind of about it. So VVIX was always pricing like perhaps there was yet another shoe to drop. And maybe we saw it today. Maybe there are more shoes to drop. Either way, VVIX back over the par strike right now, listeners, hanging out at a 108 as we're kicking off the show, up 14 points from where it was this time last show, listener. So a lot to unpack. Mr. Rhoads, we're looking a little bit spicier than we were on the show this time a week ago, sir. What's catching your eye in the ever-evolving world of volatility?
We do seem to still be a bit on edge. It doesn't take a whole lot to get VIX back up into the 20s. I've written an asterisk down here because that 2538 high, 2553 high, sorry, that occurred about an hour and a half before the regular market opened today. So it's another one of those little spikes. I'll get on the phone with Jim Carroll about it. We'll talk about it.
I was going to point that out later. That had the whiff of the outside real market hours type of print. Yes,
it was. Although 2434 is nothing to sneeze at, and that's what we got early this morning. That's still a pretty impressive number. Earlier this week, I think there was a Market Watch article or something along those lines that talked about how it's all smooth sailing now because VIX is below the long-term average of 1950 or whatever. And goodness gracious, we know that. I almost feel like when I read something like that, I should not just buy UVIX for the weekend, but buy it for the next 24 hours or so after I read something like that. So a lot of the VIX tourists think we're out of the woods, but I think you and I and the diehard listeners know that you want to see more like 13, 14, 15 to really to have VIX telling us that we're out of the woods.
What about you folks, listeners? What were you putting on out there in light of all this downside we saw recently in the vol landscape? Were you loading back up to the upside? Were you thinking, okay, you know what, this is my chance to reload the gun? Or were you like, hey, it's all behind us. It's all whistling Dixie. Let's just load up on pick your poison. VIX puts, VXX puts, UVIX puts, whatever the hell floats your boat out there to fade some vol and ride it into oblivion. In which case, you rode it into some oblivion today. Hopefully you bought yourself a little bit more time than just this Friday, listeners. Speaking of this Friday, let's see what's going out right now in the land of VIX futures, listeners. And rolling into the start of the show, listeners, we had that front contract. Obviously, May has rolled off the board now, so June slotting into the pole position, July bringing up the number 2 spot there. And June was looking a little bit juicy as we rolled into the start of the show. I wonder if I re-racked it right now, if it might be a little bit less. But June was at about 2160 as we kicked off the show, up nearly 2.5 handles, about 2.4 points. That's probably come down to about 2.25 right now. July was up a little over 2 points as well, about 2.1 points out there. If we go all the way out to the end of this year, beginning of next year, we get up to, looks like about a 22 in September, 2201 to be precise, listeners. So we just kiss a 22, then we come back off it for the rest of the year until we get back up there around January again, 2205. But once again, we are still in that, what I referred to, I believe, last week on the show, this eerily flat, spookily flat, pick your adjective of choice out there, listeners, flat term structure where from effectively July, where we're at a 2190, all the way till January of next year, we're within about a quarter of a point of the 22 handle in either direction. So we haven't really evolved as much as we've moved in the vol landscape over the past week, Mr. Rock Lobster, excuse me, Mr. Rhoads. We haven't really evolved that much in the vol term structure. Is that still giving you the heebie-jeebies? And is that still telling you maybe you think the vol market is pricing in perhaps more to come, or perhaps the vol market's just like, let's just shrug our shoulders and see what happens?
I think it's more. I saw. I don't know the last time you had Carly Gardner on talking about commodities, but I saw her in a different forum talking about how the market is. I hate when people talk about it. It's all different this time, but it most definitely is very confusing this time relative to. And we're dealing with a lot of things that we haven't dealt with in maybe a century, as far as weird tariffs, et cetera. And we're also dealing with, I think one of the things that a lot of people have taken their eye off the ball on is there was economic slowing going on around the world before any of this stuff came along. So even without the Trump tariffs, we probably would be a bit concerned about the next move for the market. But I got doing quick math here, even with the December divot, a 35-cent range for the UVIX futures. When I ran it, I actually finally quantified it a couple of weeks ago. We had very few instances of a flat curve below a buck. I think if I had used 50 cents as the definition of a flat term structure, it would have been 5 or 6 instances. So this one's really rare. So if they were really frightened with a dollar, with being in a dollar range, they're panicking out there. I feel them. They're panicking, but they don't know what direction they're going to panic in yet.
Time for panicking. Are you panicking yet out there, listeners, in the realm of all things VIX options? Let's go explore that realm, shall we? See what we've got popping off in the land of all things VIX. Let's start with our proprietary top 10 TM VIX indicator, listeners, right now. What is open for size out there in VIX options land right now? And again, we had May rolling off the board, so the bar to break into the top 10 a little bit low until we get some more ROI building up out there. Number 10, $1.37 of the June pars, the 100s, those still hanging out in our top 10. By the way, if you're wondering how we are shaping up in our proprietary VIX top 10 TM indicator, listeners, there is now only one put to be had. So we're back in that used to be the normal setup, one, maybe 2 puts if you're going crazy out there. So what does that tell you, listeners? Are we back to some bit of normalcy in the vol space? Only one put to be found in our top 10. Does that mean it's time for you to reload the gun because we're rolling back to the upside, shooting back up maybe to the upside? What does that mean to you out here, listeners? Let's also see where we can find our good pal, Mr. Waldo, where he's hanging out today. Either way, number 10, $1.37 is what it cost you to break into the top 10. Get you to the June pars. Number 9, $1.41 of the AUG 50s. So we've been cutting half already from the pars to the 50s. And number 8, $1.47 of the June 20s, or all the way down to the 20s. Dare I say it, maybe the most reasonable strike on this board until we find Waldo at least. Number 7, $1.55 of the SEP 80. So right back to the fun, listeners. Number 6, $1.60 of the November 47.5. So we are all over the place in the top 10 today, listeners, which is what makes it fun. Number 5, here's our friend. Maybe he's your preferred position on the board. Maybe you think this is a bridge too far. Either way, it's $1.69 of the June 16 puts. You like those, listeners? I think we were talking about those with the Rock Lobster on the show last week. It was a question of, are the 16 puts good? Are they a little bit of a bridge too far? I was pricing up some spreads with actually selling those 16 puts last week. So either way, 16 puts have been the focus of a lot of conversation, and they're the only put left on the board. So maybe they're the focus for a good reason. Number 4, $1.82 of the July 40s 4.0s. Number 3, 194,000 of the AUG 25. So back to, dare I say it, reasonable strikes. Number 2, 203,000 of the AUG 42 halves, and the big dog yet again, but a lot smaller than we've seen on the board in recent weeks. A little bit shy of $250,000, 243,000. That's all it costs you to take the top spot right now, listener. So get in there while the getting's good. If you ever had the ambition to be the top dog in VIX land, now is your time. 243,000 of the July 35s, listeners. So again, very interesting paper, very interesting positions, very interesting strikes throughout all of our top 10. A little bit of something for everyone, dare I say it, with the exception of maybe a little bit meatier put strikes out there for those of you maybe who are more into, let's say, an 18 put as opposed to a 16 put. Don't really have those, but everything else on the call side, you're pretty much an embarrassment of riches this week. And you know what, listeners, it's always an embarrassment of riches when we turn our attention to Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, we're doing it raw style here from the Southern studio. The folks on the podcast will get the joy of hearing your music twice. But that said, Mr. Rhoads, what's catching your eye in the world of VIX options this week, sir?
So I was actually just adding a trade to it as you started talking there. I need Andrew to fill some time for me or something today. Monday with one of the first trades of the day and there were several, there were a whole lot of bullish trades, and it reached a point where it was just call spread all week, which everybody's looking pretty smart on that right now. With VIX at 18.99, somebody bought 500 of the June 3rd. 22 calls for $1.02 and sold the 30 calls for 37 cents, 65-cent cost. I bet they're feeling pretty good about that one today. A little bit later with VIX at 18.62, and this is a trade that I think people continued to work into over the course of Tuesday, and a couple of times Tuesday. But on Monday, they bought 100 of the June 3rd 17 calls for $277. They sold 100 of the 30 calls. Again, that's the short strike of choice here. Paid $245 for it. And then just sticking with that trade on Tuesday, when VIX was at 18.20, a little bit lower, they paid and holy goodness, VIX was a little bit lower and they paid a little bit more for it. They paid $260 for 100 of those spreads on Tuesday. And then finally on Tuesday, later in the day, as VIX went down, they bought another 100 of the June 3rd 1730 call spread, and they paid $210 for that. So I guess if they liked it at $245 and $260, they loved it at $210. If VIX weren't spiking up today, we could make fun of them chasing a trade. But again, I think they're feeling pretty good about that one. Also on Tuesday, this was the one of the few bearish trades that I could find. Somebody bought 1,500 of the June 3rd puts, the June 3rd 15 puts when VIX was at 18.01. They paid 3 cents for them. So taking a shot that all is well. I guess they read that article that I was citing and decided that VIX was going to do nothing but continue to trend lower. And then more aggressive and farther out on Wednesday, ton of trades on Wednesday. Typically Wednesday's kind of a quiet day for VIX weeklies. But Wednesday with VIX at 18.90, somebody bought 1,000 of the June 25th I know we're supposed to, we're talking weeklies, but June 25th, those are weeklies. They bought the 30 calls for 99 cents. They sold 1,000 of the 45 calls for 33 cents. Doesn't this sound like a Mark Sebastian price? Net cost here is 66 cents. Everyone, those were fun numbers. And then what I was fumbling around with, and I'm going to do the entry first because I just saw the exit. Somebody bought 500 of the May 28th 20 puts, and they paid between 54 and 55 cents for those on Tuesday. And it appears to me that in the past hour or so, they've been exiting that trade, salvaging it, and getting 20 cents for or 12 cents for those options. So it looked like somebody was, playing. VIX will continue to, we'll have a nice VIX settlement well under 20 next week. And as of right now, it sure doesn't feel that way.
Well, at least they're getting what they can left for them, right? They're admitting when they went down the wrong road, and they're trying to recoup what they can. I guess we can give them something for that, right? A little bit
Nothing
of
wrong with
better late than never.
Yeah.
How many times have people just ridden their trades into oblivion and refused to acknowledge what was right in front of their face? So I guess we can give them points for that. You realize, oh, wait, I never should have done that one. So yeah, you get the heck out of Dodge while you can. You keep what you have and live to fight another day, perhaps. Are we fighting a lot out there in VIX options this week, listeners? I guess it kind of depends what your barometer is, but the answer for the most part is pretty much no. That's also reflected in the ADV, which is back down to exactly 700,000 contracts a day, not 701, not 699, 700,000 contracts a day. That's down 41,000 from where we were this time last week, and dare I say it, starting to get into that seasonally appropriate ADV number. Maybe you should even expect it to be a little lower in a typical year. Now, obviously, nothing's typical about this year, listeners. One tweet could send us soaring to a 30 handle in vol in no time. But usually this time of year, 700,000 wouldn't be out of place, and maybe even below as we're heading into the start of the summer months. Today, we have exactly half that on the tape right now, 350. So doesn't seem like there's a lot of love for the vol market right now. Then again, it is a long weekend that we are heading into, listeners. We are heading into the Memorial Day weekend, and folks usually like to get the heck out of Dodge pretty early, close out their positions, and I don't know if you're really heading to the beach in most of the Northeast. Not that warm. Down here in the Southern studio, you can pull it off. Not a lot of beach weather back up north yet. But either way, listeners, long weekend, and we're seeing that reflected at least today and for most of this week in the volume numbers. Today, like we said, 350 on the tape. I was just looking while Russell was talking because the number one print kind of brought a smile to my face. What is it, listeners? It's the June 50s, 5 O's. Going up 32,000 times out there today, listeners. And you might be saying to yourself, what price did those aforementioned June 50s trade for? The answer, listeners, 35 cents. That was a big block of 18. You had a couple for 34 cents, but it looks like 35 cents was the lion's share of those bad boys out there, which, I don't know, that might be a fun little flash poll. So let's see if we can pull it off here in the Southern studio, listeners. See if I can get it back to the Chi-Town studio and see if they can get it posted during the show. But either way, listeners, are you down for those? You like those? June 50s for 35 cents. Somebody liked them to the tune of 32,000 going up today. Now, there is OI there, so they could be taking some of these bad boys off and just, like we talked about earlier, getting what you can left for these things. But either way, that's the big dog. Number two, 30,000 of the 20 half puts. Those are definitely opening. So if you liked, let's say, a little bit of downside, but those 16 puts we were talking about earlier, they're not really floating your boat. Well, here you go. A much meatier put option for number two, the 20 halves. Number three, we fall off a little bit to 18, almost 19,000 of the June 19 puts. Still a much meatier option if you're down for a little bit of downside. Number four, keeping that same theme and going out a little bit of a ways, 18,000 of the July 17 puts. So maybe you're those tickle your fancy out there, listeners. The number five, about 15, almost 16,000 of the June 23 half puts. So got some funky paper here today, listeners, and a lot of puts. Any of those tickle your fancy? Yesterday, a little bit more paper on the tape, but not even then did we hit the already lower ADV. Only 656 total yesterday. The big dog, nearly 70,000 of the June 20 puts. So again, an interesting strike. The 20 handle is always interesting going in both directions. 20 calls, 20 puts. Obviously, it depends which way you're leaning out there. This time, we're doing nearly 70,000 of the June 20 puts. You like those, listeners? Is that a strike that floats your boat, or is that maybe too meaty of a put for you? You don't want to tie up all that capital and all that potential risk in case we do get that one aberrant tweet heading into VIX expiration that wipes out those puts. And next thing you know, we're at a 30 handle again. Either way, that was the big dog yesterday. Number 2, 48,000 of the AUG 25s. Number 3, 45,000 of the AUG 35s. That's the only one on our board yesterday that was clearly opening. Number 4, 30,000 of the AUG 45s. So quite little fun 10 handle strip there, 25, 35, 45. And bringing up the rare 29,000 of the June 25 calls there, listeners. Wednesday, a little bit more paper. And when I say a little, I mean a little. It was 685 up from 656. The big dog, much smaller though, on Wednesday, listeners. The big dog was 29,000 of the June 35s. Again, that 35 strike, we were just talking about that, listeners. In our VIX top 10, the July 35s are the big dog out there. You like that 35 strike? Is June? Is that a little bit too soon? June, maybe July, you're getting a little bit more time. I can maybe see a little bit more of an argument for that. June, it's an interesting choice. Either way, number 1, 29,000 of those bad boys. Again, most of these could be closing, so could be folks just getting whatever remnants they have left for these things. Number 2, 28,000 of the June 25s. Number 3, 28,000 as well of the June 30s. We got some 5-point vertical action going up there in June. Number 4, here we go. July 75s, 23,000 of those bad boys. And if you're wondering, these were opening. They're not bailing on some existing OI in either direction here, listeners. Purely opening on the July 75s. And number 4, 22,000 of the AUG 16 puts out there, listeners. All right, interesting stuff out here in VIX as we keep on rolling out to Tuesday. And a little bit more respectable, in fact, dare I say it, unless today really lights it up, the most respectable day of the week. 753 on the tape, so actually north of our pretty meager ADV right now. The big dog on Tuesday, 42,000 of the May 20 calls. So again, playing that 20 handle game, 42,000 of those bad boys going into the expiration. Interesting. And number 2, right back at it. If you liked those July 75s on Wednesday, allow me to present 35,000 of the July 80s on Tuesday, also opening there. So somebody was having a field day with some July upside in the middle of this week, listeners. Tuesday also 27,000 of the May 21 calls. Number 4, 25,000 of the June pars. So right back at it, listeners. June 100s. Those now we know those were coming off the board. So at least we have some certainty there. They were closing those bad boys. And number 5, 24,000 of the June 20s. What if they were rolling from the pars to the 20s? I like that. I like to live in a VIX world where that would be the case. And then Monday, I mean, this one, you know what happened, listeners? I was struck down by some pretty nasty stuff on Monday. So there was no option block. And that probably explains why this VIX number is so anemic. Because if we were doing a show, we would have at least ginned up some paper, I have to assume. But 343 on a Monday coming out of the weekend, I can't remember the last time we were that anemic. Even today, which is pretty quiet, we're already past that today. So 343 for the entirety of the day. That's starting to look like some midsummer paper to me. Either way, the big dog, such as it was, 22,000 of the May 18 puts. Number 2, 10,000. We've already fallen to 10,000 for number 2 of the May 17 puts. Number 3, 10,000 as well of the May 17 half puts. Number 4, 8,300 of the May 19s. Actually got some calls slipping in there. That's not enough. 7,700 for number 5, listeners, of the AUG 60. So just when you thought I was out of surprises, Mr. Rhoads, I present to you your new favorite strike on the board, the AUG 60, sir. In addition to the the VIX weeklies you were just talking about. Anything else catching your eye in the big VIX mothership options this week? Any of these trades really float your boat? I mean, are you really down for some of these July 75s or June pars, sir?
Those 50s that you're looking at is a sell, and I think they're taking over a $2 loss on them. It looked like they purchased them, and this is one of those. Periodically we get questions about, how the hell do you know if they're a buyer or a seller, et cetera. And back on April 11th, there was an awful 411 of all things. Back on April 11th, there was a lot of activity in those 50s. It looks like there was a 25-50 call spread, bull call spread, which was a smart one. But then it also looks like the biggest activity was a buyer that was paying over 254. I'm jumping all over the place, and I don't have all the numbers in front of me, but it definitely looks like this might be an exiting trade and taking kind of an ugly loss, taking advantage of what's going on in VIX today, to much like that last trade that we just talked about. Just looks like it might be salvaging what they can out of this one, assuming that we're not going to go above 50 between now or go much higher between now and the June 18th expiration.
Today was a gift. If you were choking on the 50 strike, you're like, oh my God, I can get out.
Well, at least I can get 35 cents. Yeah.
Praise the vol gods. I can get 35 cents back on my $2+ that I threw away on this trade. So yeah, when you see those strikes, listeners, they do often have the whiff of perhaps bailing or something else working against. But they're always fun to point out, because there are those moments when it's just straight up. And it also raises an interesting question. Right now, here we are, we're hanging out 35 cents, listeners. So the old proverbial gun to your head, which way you going on those bad boys? And we say sometimes you can sell them. You can sell them as part of a spread if it makes you feel better, but you don't have to naked sell the June 50s, because that way lies madness sometimes. You know what else lies madness, Mr. Rhoads, is going down the land of inverse vol and expecting something different. Getting a little bit of action out there today, at least, which is interesting. I know the chat was talking about selling some puts in SVIX. I also have been selling some puts again in SVIX, and looks like we're all getting some stock put to us out here today. Well, obviously depends where you were lining up, listeners. But I was pretty far out of the money, I thought, and now we're back at a 13.5 right now. Excuse me, in SVIX. Down nearly 2 points, 1 3/4 points. That tends to happen, listeners, when your vol spikes up in the morning. SVIX tends to go the other way. It is the inverse product at the end of the day. Not seeing some of the numbers you'd hope. I mean, the ADV is back to 14,000, down 4,000 a day from where it was this time a week ago. Now, of course, we are heading into a long weekend, but we are seeing a decent movement in SVIX for the first time in a few sessions at least. So you think that would gin up a little bit of paper, but not much, only about halfway to that ADV right now, right around 7,000 contracts out there. And just because the kids demand it, Mr. Rose, we're talking inverse. We got to talk about everybody's favorite inverse product, V yield. I love these prices. Why can't it settle at a round number? Nope, 23.97, down a half a point again, because why not? It can never be a 24 or a 23 half. 23.97, Mr. Rhodes, because they got to be cool out there in V yield land. Mr. Rhodes, what is catching your eye in the world of inverse vol this week?
Well, I'm kind of like you guys. I've been selling put spreads, so just in case, but trying to work my way back into a decent SVIX position. I still only have a quarter of a position. I'm going along with everybody else that is making the term structure flat and just kind of clueless with respect to what's going on in the world, and waiting for the market to tell me what direction it wants to go. Although I'd probably be more convinced if the stock market decides it wants to go down and and volatility decides it wants to go up. So that's probably the main thing that I've just been keeping an eye on there with respect to the short funds. I do think over the long term I'll be very happy to own them. With some more coming out, I do have like a little stack of information to parse everything and try to explain the difference between V yield and SVIX and all the different ones that the SEC seems to be a bit more happy with because they're point related and not percent related. So that's where I am. Just continue to kind of hold on to the short ones, and thank God that I own the long ones every once in a while.
I think it is interesting and worthy of note. You're selling put spreads, not just puts in SVIX.
Well,
So still not fully confident, are we, sir?
No, it's not that. It's I made the executive decision a long time ago that I don't want to be able to sell naked options. I just don't. I just don't allow myself to do that. So, and part of it so that I don't make a mistake, which does happen. I think people that are non-traders are shocked to find out that sometimes we make mistakes. Either buying or selling something, that getting it backwards, etc. I just want to make sure that I don't, get out of a spread and all of a sudden have a short option out there that I don't want to have out there. So I don't allow myself to do that. When I say put spreads, I mean, I'm buying one way out of the money for a nickel. It's not really a put spread. It's a risk control. It's a risk controlled cash secured put. Like that.
Hey, when you've had serious head trauma, it's always good to have a couple of nickel options in your back pocket in case you hit those fat finger errors. But I see what you're saying. We do a lot. Mostly we're talking about it when people are selling options in these wild meme stocks. So we say, hey, don't go crazy, net short units to the upside. But you can make the same argument for all trades you're selling at the end of the day. All options that you're selling out there to have that other leg against it, just in case, listeners, just in case the worst goes against you out there. Or we always say, too, if you're comfortable picking up the underlying at that level, which in the case of SVIX I am, that could also work in your favor for a little bit of put selling. But either way, interesting stuff out there. It'll be interesting to see where we settle out there right now, listeners, as we're seeing like maybe vol coming back in a little bit after a spicy start to the morning. Speaking of spicy, Mr. Rhoads, and the vol landscape, they don't get much spicier than our old pal UVIX, the levered product, up over 6 handles right now from last week, 33.5 right now, up 6.1 points from where it was this time last week. So catching a nice little bid. So if you were looking to fade and now you want a little bit of a reset to fade again, maybe that's your huckleberry, or maybe you're saying to get the heck out of the way. Either way, UVIX looking a lot more frothy this week. 27,000 contracts on the tape. That's looking better because the ADV is only 18,000, but that's moving in the right direction. Unlike SVIX, that's moving up 3,000 from this time last week. So, and clearly they're beating it by almost 2x already right now. So things are looking better on the UVIX liquidity front. For whatever reason, SVIX has a hard time catching a bid on the volume front. But Mr. Rhoads, what are your thoughts on UVIX right now? And then B, I know you have been doggedly behind the scenes compiling the results of your uber secret weekend UVIX strategy, and you got some results for us, sir.
I feel like I should get one of those apps that says "Buy me a cup of coffee" for anybody that's been able to take advantage of this. I really, my timing and everything. There's a whole lot of luck involved in what I'm going to talk about right now. And Mark, you Andrew, and the other Mark, you guys know that it's just not my personality to take big victory laps, but this one, if I've ever deserved one, I might deserve one on this. So back in the summer, I figured out that I took a look at what would happen if you bought UVIX on Friday afternoon and sold it Monday on the open. And I did that for all the data going back to April of 2022 through July of 2024. And I found at the time that the average move for UVIX was up 0.25%. That you had a 21% gain once, you had an 8% loss, and your win rate, I think this is the one that's kind of surprising right off the bat. And your win rate was 43.33%. That was in July. So, and I just continued to do it. We would talk about it on here every once in a while. Usually my modus operandi is to do something like this and trade along. And as long as it looks like it's profitable, trade along for a little while and then come back and compare what the back test says that I should have done relative to what actually happened. And I did that at the end of 2024 and everything was in line. But I didn't really, I did it at the end of 2024, like, okay, this is working the way it's supposed to. So I continued to do it. You always ask me if I've updated the numbers. So I was like, well, I'm coming on today and I'm going to be by myself and we've got time to talk about this. So I reran the numbers on UVIX go through last week, and the average UVIX move over the weekend since inception in April of 2022 is a gain of 0.86%. So if you bought it on the close Friday and held it to the close on or on the open on Monday, that's all you do. I've experimented all over the place with different methods of this, and it just can't come up with anything better than that very basic approach. Your average of 0.86%. There was an 88.75% gain in there. That helped an awful lot. There's also a loss of 17.77%, and the win percentage is 43.33%. It's pretty much stayed the same as far as the win percentage goes. I knew it was doing well in 2025, and typically I wait till the end of a quarter to check these things, but I just wanted to see what was going on here. And Mark, were you shocked when I shared that number with you? Because I'm still shocked.
Yeah, this is supposed to be.
I almost wish we could do a real flash poll real quick to get people to guess. But the average, if you bought, there's been 20 weekends so far in 2025. And if you had bought UVIX on the close on Friday and sold it on the open on Monday, your average trade profit is 2.43% a trade. And that 88% move, that one happened back in 2024. The best move is 23.45%. So it's not like all of those gains are coming from a single, it's not like we had one giant volatility spike and then a whole lot of small losses, which is what you would expect from a long volatility strategy. There is the biggest loss is 17.77% in 2025. That was the same number as before. And the win percentage this year has been a little bit better, but it's still not above 50%. It's 47.62%. I've got all the numbers for VXX, VXZ, and UVXY because we have a longer history for those, and those also look fairly impressive. VXZ, surprisingly, you would be up over half the time. Now, your average gain in 2025 has been 0.55%, but your biggest loss has been a drop of 4.89%. So, it's how much risk are you willing to take over the weekend versus the long-term reward that you're going to get. But any of these 4 long volatility ETPs, and I've run the numbers starting in 2018 for VXX, VXZ, and UVXY, even over those longer periods of time, which incorporate some lower volatility periods of time, this kind of basic approach kind of works. And and when we were talking about the short funds, thank goodness I've been doing this, because it really does. It has helped me tremendously with respect to owning SVIX and owning a little bit of V yield.
Yeah, those are really stunning numbers. And I'll have to start changing the title of your trade from the secret weekend trade to the secret weekend domination trade, because that thing's crushing it, especially when you look at it through the lens of it's supposed to lose till you hit those nice bangers that make up for it. And people also think that, as you mentioned, they think that one big outlier of 2024 is gumming up the works. And that was a nice one. August 5th was a nice one. So another time when I was traveling and couldn't trade at Mr. Rhoads. So there is some correlation to when I'm in the mobile studio, sir, and UVIX popping off. So maybe we need to research that a little bit further.
I'm doing double my UVIX for the weekend.
You should put on 2X.
And by the way, I did check this thing for holiday weekends, and it doesn't make a difference. It's a 3-day. I just took a look at should we exclude the 3-day weekend? Should we, just for the heck of it? And it didn't change the results markedly at all. So there.
Yeah, that's supposed to be as a little fun thing that maybe catches you. You want to have your table stakes and just kind of keep treading water, keep your head above water until you hit that August 5th or that big moment. And it's been doing well weekend after weekend, which is not how it's designed, not how it was intended. But hey, I don't think you're mad at it, Mr. Rhoads.
No, they should not be mad at it. Actually, the UVIX people should be sending me like a T-shirt.
There you go. They should send you a T-shirt. Everyone who's been trading this now, not so secret, because we've been talking about it for a while. That could be your new program, your new newsletter you're selling. Russell Rhoads' secret weekend domination trade. There you go.
Charge for any of that stuff. I just put it on my Substack.
I know. You're a nice guy. Check out Russell's Substack
nice.
if you're not listeners. He's giving you gold. He's giving you gold, and all he asks for is a cup of coffee and maybe someone to help him off the scooter when he's riding the scooter a little bit too fast. That's all he asks for, listener. He's a very reasonable fellow out there, listeners. As we keep on rolling, UVXY, I know a lot of you out there love it. It's your flavor of choice, and let's put up some numbers again today. 92,000 contracts on the tape today against an ADV of 74,000. That's actually moving in the wrong direction. I was going to say I thought it was closer to 100, and it was not that long ago. So it's come in a little bit. Still putting up 92,000 today. That's nothing to sneeze at. UVXY 2480 today, up about a little over 3.5 points from our last show. And then I know, Mr. Rhoads, when you're not busy dominating the weekend with your secret UVIX trade. I know VXX, you used to poo-poo it. You used to say, I don't want to talk about VXX, but I think it's a little bit more on your radar now. And this is another one where if we were talking just a week ago on the show, how if you had some downside in it, obviously it was looking fantastic. Blew through the 60 handle and way down, getting down to the 50 handle. VXX resetting the gun for you this week, listeners. 57 1/3, up nearly 6 handles, obviously getting higher before the show. Let's go out really quickly and see how high did we get in VXX land today. 59 1/3. Again, that was right on the open, so bear that in mind. But still, VXX kind of resetting that gun. So if you are a big proponent of that VXX downside trade, then maybe today is your huckleberry, or maybe you're mad because you got run over right on Friday going into the long weekend, and they didn't give you a chance to really get out of anything. I could see an argument for both. 34,000 contracts on the tape today. That's pretty much right in line with its now lower ADV of 37,000 contracts a day, which is down about 5,000 from where it was this time last week. Mr. Rhoads, we've talked before about VXX and its issues and the problems associated with it, and washing our hands with it. People have since seemed like they've forgiven it. They kind of understand what it is now, and then they like it to a certain degree for what it is. I think even you have started nibbling out there again. What's catching your eye in VXX land, sir?
Use for VXX was and I need to go find the numbers on this. I do these things, and then I fall off a scooter and I think about them and I forget about them. But I used to be, if we got a 15% plus move in a single day out of VXX, if I sold a slightly out of the money call spread, the win percentage was like 85%, and it was a nice profitable strategy. But that was using VXX as a short volatility trade. I probably stopped doing that because I was just always owning the short because SVIX came along and gave me decent short volatility exposure already. So I already had it. But that was always my biggest use with VXX. I don't hate it. I just feel like if the best use outside of the weekend trade, the best use of the long volatility ETPs is really as a short-term trade, almost like an option trade. That's how I used to describe it when I was at the Options Institute. If you buy an out-of-the-money call option on something and the market moves somewhat in your direction, you're still probably going to lose because of time decay. You need to get a dramatic move for that out-of-the-money call option to pay off. Kind of the same thing with these volatility ETPs. If you're going to experience, a grind against you, and the best use really is if you're pretty certain that you're going to get some sort of volatility move over a short period of time. Much like if you're buying out of the money calls or out of the money puts, you're really speculating you're going to get a big move in one direction or another.
Yes, indeed. Maybe we'll talk about a little bit of fun speculating coming up on options oddities for all of our pro members in a little bit. We had Matt on the show not too long ago talking about all of his earnings vol analysis. If you want to check it out, we have the latest editions of his earnings move results, and earnings season reports available for you over there on the website, theoptionsinsider.com. Click on the options news and articles tab. If you did that, you would see that maybe the worm is finally turning on these endless series of earnings seasons where you're just knocking the cover off the ball from a long vol perspective. Listeners, I mean, we've been saying for a while, Matt and I, when is this long-term average going to come in? The long-term average right now is 120%. That is ridiculous. That's showing 100% as if everything moved pretty much exactly in line with its straddle. 120% means you're crushing it. So the highest we've ever seen since we've been crunching this data. We've been doing it for a while. Right now, the season is at 97%, listeners. So maybe that worm is starting to turn. That said, maybe it's turning again because the last 2 weeks of the season have been the most aggressive, 114% and 122% for weeks 5 and 6 of the earnings cycle. So maybe the last couple of weeks will save it, but I don't think we're going to be hitting a 120 out there, listeners. And nonetheless, you can check that out for yourselves as we check out what you folks have on the brain, a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Got a lot of fun flash polls going on right now. Mr. Rhoads, our audience seems to be going back and forth on those July 50s, as the kids say, for 35 cents. They like them, they don't like them. Right now, Mr. Rhoads, 53.8% want to buy them, 46.2% want to sell them. So our audience is very split these days. Have you noticed that, Mr. Rhoads?
It's, the audience, is, I think you're at the same level as most volatility traders and professional volatility traders. The tug of war that's going on between them, it's got us at a stalemate with a flat curve. So the audience is basically reflecting the same thing. This massive uncertainty that we're picking up on when we see the futures all within the same price, and the market just not having an idea as to what the next direction is. The audience is, half of them think that we'll probably get a move up, that you'll be able to monetize those 50 calls, and half of them probably not. Personally, I think I would getting 50 cents for 50 strike call options. If I were worried about a volatility spike, I might consider selling those guys and buying a lower strike. Joel, I would take advantage of that high premium and offset some of the cost of a lower strike call.
Certainly some wisdom there. Now, Mr. Rhoads, they're intrigued by the 50s. 70s, though, that's a bit of a bridge too far for them. We asked them last week, hey, we saw the June 70s trading for size for 11 cents. At that price, are you a buyer, a naked seller? You're going to sell them as part of a vertical, so doing the old risk mitigated selling, or you're not touching them with a 10-foot pole. And that was the winner. 44% said you're not touching the 70s. So 50s, you might be intrigued. 70s for 11 cents, no thank you. 28% wanted to buy them. 16% said you would sell them as part of a vertical. I'm glad to see only 12% of our audience wanted to sell them naked, because that way lies madness. That 11 cents might come back to haunt you in your nightmares, right when you least expect it out there, listeners. And we do have a question right now, Mr. Rhoads, speaking of our polls, that is live as we speak. It comes on the heels of all the conversations I had down at the OIC conference. I don't think I had a chance to ask you about this, but the hot thing at OIC this year, Mr. Rhoads, was finally we have a proposal on the table to list 0-day options in the equity, so single name equity. So effectively your Mag 7 and Broadcom. So we might have a chance to have, by the end of this year, beginning of next year, 0-day options in, all your Mag 7, which is kind of interesting. So we asked our audience, Mr. Rhoads, do you want these? Heck yes, should we list them now? Or you don't need any more 0-day options, or you have some concerns, or the infamous other. Mr. Rhoads, where do you fall on seeing effectively a pilot in the Mag 7 options for 0-day? And where do you think our audience is falling?
Well, your audience loves trading, so I'd say about 2/3 are approving of it. I've been all over this. This is something that I actually wish we had more of. I wish we had daily options in like the gold ETF. We've got 3 days a week now, but so I would like to see this in like, I'd like one of the most actively traded markets over in Europe. Number two in the future, in the equity futures, is the financials. I'd love to see daily expirations in the XLF ETF as well. So I'd almost rather see it in some of those markets. But if we're going to get it in equities, let's put it out there in Apple and see what happens. Because Apple is practically an option market. Apple's bigger than SPX was back when we were not talking about it, but actually trading it on the floor.
Yeah, that's
So
bigger than
I'm
now.
yeah, I mean, yeah. So I think daily options. I always felt like, daily options, the day on reaction data earnings. That's what I was always proposing at SIBA, was have an earnings contract. The second that a company makes their earnings announcement official, now we've got for Target on Wednesday, we would have had a May 21st expiration. So, and I always felt like that would be the really good first use of daily options. But having them every day, and then it'll be really fun to see how they trade when we have earnings coming up. I've had an absolute field day on the dailies on the indexes around the world. So I'm looking forward to it.
Now that you bring that up, there is a carve out in this provision to exclude earnings week. They're getting away from that. So the sole reason you want them, they have eliminated from these products. And maybe that makes you a little bit less interested, Mr. Rhoads out there. But
Just
yeah, that
banging
was
my head against the desk.
That was their one concession to risk out there. No earnings week for none of the Mag 7 on these lists. So Russell's out, I think. Right now, listeners.
Just one little thing with respect to, I just know from experience that if you hear something like that, the regulators were given that nudge. That typically something like that is they went to the regulators, and this is me just speaking from experience. Went to the regulators, said, we'd like to do daily equity options. The regulators say, all right, let us think about it. And then they come back and they say, well, we'll allow it, but not on, not on announcement week or something like that. So now we're going to have to wait until Apple has their new product announcements, and then we can see we can trade around that instead. So
yeah, there definitely was a concession or two to be made just to get this proposal out the door. Right now, you have to remember, we do have a lot of pros in our audience, a lot of industry folks, and they're maybe a little bit more skeptical on this because people, the largest response is still heck yes, list them now, 46.9%, and then 28.1% though saying I have some concerns, and then 25% saying we don't need any more zero DTE. So you add those two together, obviously 53% saying they're not into these or they're kind of concerned. Which is kind of interesting. That offended the folks at Schaefer's Research. They replied to that and they said, to whoever said we don't need more zero DTEs, and they tweeted the gif of Dr. Evil saying zip it. I thought that was kind of funny. So there you go. People on all sides of this fence, obviously listeners, where do you fall on the whole 0-day fun palooza? Hit us up, let us know. Make your voice heard on our poll. Speaking of making your voice heard, let's get this one really quickly. This person sent this in a while ago, and it kind of just brings a smile to my face. This comes from Spherid. Looks like Spherid is the handle. And they say, just learned about this show and loving it so far. Well, thank you, Spherid. Better late than never, as they say. Did you guys invent the VIX top 10 indicator? I think that's pretty cool. More people should talk about it. Well, yes, we did. No one ever thought about looking at the top 10 open positions in VIX until we did it on this show, Spherid. So we completely invented. That's why we say TM on this show. No one else can use that. That is proprietary data. Even the SIBO can't list the top 10 on their own product. Only we can. That's how litigious we are on this issue, Spirit. So thanks for liking. Of course, I'm joking. It's just a fun thing we kind of started talking about here on the show, and it took on a life of its own, and we're happy that it did. We're also happy that you discovered the program, Spirit. It's folks like you that keep it going as we head right on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, welcome to the crystal ball, the portion of the show where we get dangerous out here and see what the vol gods have in store for us. We are heading into a long holiday weekend. As I said, we are coming into the end of the show, not that dissimilar from where we were at the start of the show, with the exception of S&P rallying a little bit. We're only off about a little over a third in the S&P right now. Dow off about a third, and NASDAQ off about 0.6%. So we have gained a little bit in the indices. Who knows? This trend will probably end the day green or flat. VIX cash at about a 2170 right now, listeners out there, as we're coming in to the end of the show, which is pretty much, we're at 21.75 when we kicked off the show. So not that far away. In fact, let me re-rack it again just to make sure. I think it's come in a little bit since it 21.56 to be precise. So that will be our closing number here for the crystal ball. And spoiler alert, listeners, we didn't have any 20, let alone 21 handles on the show last week. It was myself, it was Dr. Vix, it was the Rock Lobster, and it was Matt Corin from UVIX. He was at a 1740. Russell was at an 1837. Andrew was feeling the fade at a 1620. I was at the top of the board. I thought I was looking spicy at a 1926, but no winner for any of us. Also on the VStocks front, I was at a 2001. Russell was at a historically appropriate 1776, and Matt was at a 1740 out there. Let's see if I can pull up really quickly where VStocks closed. 2248. So yeah, no joy for any of us, Mr. Rhoads. We were all wild this week, which means coming up this week, Mr. Rhoads, tell you what, I'll let you choose. You want to go first or do you want to go last?
Let you go first. And I do want to point out, I don't know what day it happened yet because I've been running all over the country this week, but VIX at a discount to VStocks, that's a flip. It's been a while. Been a long while. True. Yeah, it's a pretty extensive. I just don't have the numbers in front of me, but that's something I'll definitely be talking about this weekend.
You know, I'm not hating this. Tough, a little bit of higher vol out here this week. I was feeling it last week. I just wasn't feeling enough. I still think we're going to be frothy this time a week from now. I'm going to say, I hate to do this. I don't really hate where we are right now. I'm going to say 21.55. I think we're going to get we'll come in a little bit towards this weekend. Obviously, something will happen this week, jack us back up again, and we'll settle back right close to where we are right now, Mr. Rhoads. What do you think?
22.26. Is that too close to you?
No, that's fine. 22.26. Okay. We can slug it out for about 3/4 of a point out there, listeners, and see what the folks have in store for us and what the vol gods have in store for us out here this week. We got some 18 handles in our chat. We got 24 handles. Man, we are, Mr. Rhoads, our audience is kind of like us. They have a hard time. They have a hard time making up their mind. 23 handles. Yeah, I feel you out there. This is a hard one, listeners. Interesting stuff. Mr. Rhoads, in the meantime, if folks want to check out, they definitely should be checking out your secret weekend domination trade now. Or where should they go if they want to learn more?
If you Google my name and it's RHOADS and Substack, you'll find my Substack. Everything I do, I talk about on Twitter. I probably should be on there more, but I feel like you got to pick your spots instead of tweeting 52 times a day. So yeah, those are the two spots to find me. I got nothing really dramatic coming up in the near future other than digging into numbers and sharing a lot about those numbers.
The summer life of an academic. We all should be so lucky. Listeners out there. Check them out over there on the Substack. If you too want to dominate the weekend with a little bit of UVIX action, that is going to do it for us on Vol Views. Also going to do it for us on the on-demand side of our broadcast week. Hope you're having a good trading week and a listening week. If you missed anything, of course, you can go check it out on the on-demand side. If you're hanging out in the pro, hey, it's your lucky day. I'll be back instantaneously in your ear holes with a whole bunch of options, oddities, fun, listeners. So no rest for the wicked for you folks or for me. It should be a fun time. We'll see what wild stuff. We were talking quantum yesterday on the option block with the Flowmaster. We'll see what kind of wild paper we have in store for us out there this week. It's a wild week when Oatly alone is over $11. Things are crazy. Things are wild. Dogs and cats are living together. Mass hysteria. Should be a good one. If you want to check that out, only place to go, listeners, theoptionsinsider.com/pro. Then we're back again, not on Monday because we're off, obviously, for the Memorial Day weekend, with our usual array of content next week, sans Monday, until we're back next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.